Let's start.
Your package.
Welcome. Good evening, everybody. Happy Easter. Happy Easter. We just lost to wait for every other person to join. Glad to have you here. Drop a comment in the comment section if you are here with us. So let me know that you are hearing me. I'm seeing Divine Favor Nachi. Good evening. Good evening. Okay, let's just join the group. I'm just trying to create an alert on the group. Thank you. Please join the web now. Thank you. Join the web now. Thank you. Okay, we'll be starting by 8 o'clock so that let's just give time for that people to join. Please, if you can hear me, just drop it in the comment section. I can hear you. Let me be sure everybody can hear me. Please, if you can hear me, drop it in the comment section. I can hear you. Hello, please click the link. Click the link on the group and join. It's not here. Click the link in the group, the YouTube link in the group and join. Thank you, everybody. Please click the YouTube link in the group and join. Thank you. Sorry? Please click the YouTube link. Click the YouTube link in the group and join. Minka Chiamaka, please join the YouTube link. Nolly Uju, Priska, please join the YouTube link, please. Ada Zion, Jane, please join the YouTube link. We are waiting for you. Uju, please join the YouTube link. Okay, if you join, please leave this group. If you join, leave the group. Sorry? If you join, please leave this group. Okay, thank you. Uju, have you joined?
Yes, I'm here.
Okay, please join. Leave this. Leave the WhatsApp group and join the YouTube. Please leave this call and join the YouTube. We're not doing it on the call. Doing it on the YouTube group, please. Leave the WhatsApp so that people cannot join. Leave the WhatsApp group.
Okay.
Thank you. Jane, Uju, and Priska, I'm waiting for you to leave the WhatsApp group, please. Other people will not join. Priska, can you hear me? Priscilla, can you hear me? Okay, please join the WhatsApp group. Join the YouTube. Join the YouTube link. WhatsApp group. Imelda, please leave the WhatsApp group and join the YouTube link. Good evening, everybody. Happy Easter. Glad to be here with you face to face. Most of the time, we only drop voice note and WhatsApp messages. Today, you are seeing my face in a long time. Well done. Thank you so much for joining, despite your busy schedule. Thank you so much. Please, I want to know your names and where you are joining from, please. Just drop your name. I think we're about 12 in the group right now. Drop your name and where you are joining from, the city you are joining from. My name is Chizoba. I'm joining here from Oka. So let me know where you are joining from. I want to know my city members and where Iconic World Hub have grown to. Just drop your name and your city so that we can kickstart. I want to be sure that you can hear me. Dr. Ngozi from Port Harcourt, thank you so much. Joy from Jos. Hey, hey. Iconic World Queens. Not too much. Chineye from Oka. Beautiful, fantastic. Favor from Oka. Thank you so much for joining. Chiamaka from Oka. Thank you so much. Thank you so much. Ada Zion from Oka. Thank you for joining. Well done. Thank you so much. Sylvia from Asaba. Dr. Damilola from Ibadan. Wow. I'm so thrilled. Obi from Port Harcourt. Silva from Asaba. Thank you so much. Thank you so much. I'm so glad to have you here. So glad to have you here. So in about 2 minutes time, we'll just start at on 8:05 on the dot. We'll start. Things. So I want to just remind us that just in case you are here, please just ensure that you stay to the very end. There's a lot to learn. A lot to learn. We are making money this year. We are making money moves this year. And I'm not joking. I'm telling you the truth. So this is just one out of many other options. We'll still have time to always come together and learn. The whole idea here is not just to save, but to ensure that your money is making more money for you. When you go to bed and sleep, your money should be working as hard as you work. You shouldn't work at the end of the day and your money is not working. It's not an Iconic World Hub. Not at all. So we'll soon kickstart. 8:05 for kickstart. Thank you so much. Email that from Oka. Thank you so much. Thank you for joining. Mama is in the team. Oh, it's on the group. Hello. Thank you so much. I'm seeing your love. Thank you so much. Our visionary is here. Thank you, ma. Thank you for joining. Thank you. Mary from Calabar. Hey. Hey. Sheila from Calabar. Well done, ma. Thank you so much. We are growing in leaps and bounds. Thank you so much. Please, let's start. Let's kickstart. Those that will join us from here will continue. So let me just start sharing my screen now so that you can take it from here. Please, I'm trying to share my screen. Just hold on a bit, please. So from time to time, I'm just looking at my phone so I can see the comment, because if I start sharing my screen, I can't see the comments any longer. So I'll be looking at them just to ensure that everybody is listening. Can you see my screen, please? If you can see my screen, just say I can see my screen on the comment. Drop it on the comments. If you can see my screen. Esther from Ijebode, thank you so much for joining. Git from Oka, thank you. You're so welcome. Welcome. If you can see my screen, please drop it so I can go ahead. Drop that you can see my screen in the comments so I can continue. Okay, thank you so much. Simi can see my screen. Thank you so much. So let's start. You can see on the screen the smart way to build wealth with mutual funds. The smart way to build wealth with mutual funds. So investing is structure, not luck. Other people feel that you just need to wake up in the morning and money will just drop on your laps. It's not possible. Investing means that you must have a foundation and you must have a structure. It doesn't just come by waking up in the morning and money will just fall on your laps. There are some things you must put in place if you want your funds profitable for you. And while you're on this, one of the things that makes us unique in Iconic Wealth Hub is the fact that other contributions, you will save your money, and at the end of the year, you just get only your capital back. But because of the experience that we have here and what we understand when it comes to making money, we cannot give you your funds back just like that. We have opportunities available to us where we can invest these funds, and no matter how small, your money comes back with something on top. So that's the structure we have put in place here. And so I want to teach you that structure so that even on your own, you can build it. So investing in structure is not luck. Saving alone is not enough. It's just like somebody that have two hands and they're just using only one. You tie one to the back of your at your back and keep using only one, or you have two legs and keep using only one leg. You cannot be stable enough. So saving alone is not enough. That is just one part of the equation. To be able to enjoy the full part of the equation, you also need to invest those funds. So your money must work for you. Your money, I didn't say can, I said must. You cannot be working hard and your money is not making money for you. You are, even as a single person, you have dreams, you have aspirations, you need your money to, and your, one time scripture says, money answereth all things. That's funds. What is mutual funds? Full of funds from different investors. So somebody has 500,000 naira, person brings his or her funds. I have 5 million, I bring my funds. You have 5,000, you bring your funds. This person has 50,000, he brings her. So it's a pool of funds from different investors. The minimum is usually 5,000 naira. So what any amount you have, you can play in that in the mutual funds market. So it's a pool of funds from different investors managed by professionals. Professionals fund managers. These are people who have experience in the market, in terms of playing in the money market, in terms of playing in the equities market. Because to go further, you understand that mutual funds is broken into equities and money markets. So these are managed by professionals. On your own, you may not have all the time to go and be monitoring the market to know when the when what they call it, equities is high, or when the stock is high or low, or when commercial papers is high, or when treasury bill is high or low. You may not have that time. You may be too busy as a person. Your business is taking your time, your family is taking your time. You can still play in this market. You just need to leave your funds with them, and these funds will be managed by professionals. You just keep your funds there and go to bed. Now, these funds are invested in assets like money markets, fixed income, or stocks, depending on where you want to play. As you go further, you understand what I mean. When you invest in mutual fund, you still have not decide, okay, I don't want to just reward my money. I want to play in money markets. You play in money market mutual funds. You are a high risk taker. You want to now grow your wealth. You can play in the equities market. You now want hybrid. You want a situation where you can play both in the equities market and in the money market mutual funds. There's a place for you to also invest your funds. So I hope you can, if you can hear me, please drop I can hear you. I want to be sure that everybody's hearing me. I want to be sure everybody's hearing me. Please just drop I can hear you. Are we here? Okay. Thank you so much. So next, why mutual funds? Why mutual funds? Number one, professional management is handled by people. If you want to invest in equity mutual funds, we have people who understand the trends, the highs and the low, when to invest and when not to invest, knows about different kinds of companies. Professional management. Number two, diversification. When you want to invest in treasury bill, you invest in only treasury bill. But when you invest in money, for example, money market mutual funds, you are investing in treasury bill, commercial paper, government bonds at once, in the whole package. You can decide on your own you want to do treasury bills. On the other hand, if you invest in mutual funds, you are saying, I want everything, I want a P at once. That's where the diversification comes in. It is easy to start. With minimum of 5,000 naira, you can start. The more you have, the merrier. So it is easy to start. You just need to download the apps, log into their website, register with your BVN, your NIN, your ID card, your utility bill, and your passport. Just the way you want to open your account in a normal commercial bank, and you are good to go. Then it's accessible with small amounts. Next, investment objective. The objective of mutual funds is to grow your wealth. As you go further, you understand it very clearly. The goal here is to grow your wealth. We're not here to play games. We're not here to be sentimental about the market. If your money making money or not, you move. That's the whole idea of making money. But here, we're making money legitimately. And there are legitimate ways to make money and to grow your wealth. That's why we're here. Another objective is to beat inflation. As at today, inflation rate is 15 to 15.5% per annum. You keep your money in a commercial bank that is giving you 5%. You are doing yourself a disfavor. You can't be here in this time and age and you have funds you are saving and you are leaving it in a commercial bank. You are definitely not going to outrun inflation. But with this mutual funds, you can beat your chest that your funds will definitely outrun inflation. Definitely. Then the whole idea here is to achieve goals like rent, school fees, retirement. You want to build your income. Sometimes you have emergency funds, you have rent that you already saved it up, but this money is your commercial bank doing nothing, and you want to pay the rent maybe in 6 months time. What will you do? You can put that money in a money market mutual fund, and that fund will be building for you pending when you want to pay your school fees. Or you can put it in an equity mutual fund if you want to do long term. You have a project for the next 1 year, 2 years, 3 years. Put the funds there and it's growing. Now let me tell you something. On the 12th of February, I invested 2 million naira in equity mutual funds. As of today, I have over 200,000 naira sitting in that, like 260,000 naira sitting in that account, just by investing 2 million naira from February 13th till now. Now, because even if the fund is long term, for example, I have 260,000 naira, that's somebody's salary sitting in my account, just like that. I didn't do anything extra, just because I saved the money and I invested it. Now, you can use that extra 260K for school fees. You can use that 260K to add to your income and reinvest it. You can use it to add to your business. You can use it for vacation. Do you know what 260K? At least you can get, even if it's 1 week hotel vacation, you go and rest your brain as a mother. It will go a long way in helping you. Then you have types of mutual funds. There are types of mutual funds. The first one is equity mutual funds. We have money market mutual funds. We have balanced mutual funds. We have halal mutual funds. So for equity market mutual funds, it's high risk. That's the beautiful. Please help me bring this. What is that paper? For equity mutual funds, it's high returns, high risk. Then for money market mutual funds, it's low risk. Balanced mutual funds is hybrid. Then halal mutual funds is Sharia compliant. I will break it down. For equity mutual funds, you are saying you want your funds to be invested in the stock market. When you hear equities, they're investing majority of that funds in the stock market. And why is it high risk? Because the prices of shares tend to fluctuate. It goes down, it goes high, it goes low. So as long as the funds are going low, it will affect you. And as long as the funds are coming up, it's also going to affect you. So that 2 million I invested in equity mutual funds. but it's for a long term. It's for a long term, sorry. And I don't intend to go there and opening the account every day. Hey, okay. Every 2 days you go there. If our money gone down, you now withdraw your money and you now make close. No. Money market mutual funds is for low risk. Here your capital is safe. If you don't want to hear story about your capital, you can invest it in money market mutual funds. Your capital here is safe. The rate is not as high as equity mutual funds, but you are sure that your capital is safe. Here in money market mutual funds, they play in the market when it comes to instruments like treasury bills, commercial papers, government bonds. That is where these funds are invested in. Then we have balanced mutual funds. That's a combination of um, equity mutual funds and money market mutual funds. You don't want all your money to be in the equities market. I don't also want all your money to be in money market mutual funds. So what do you do? So you don't want all your money to be in equity mutual funds, and you don't also want all your money to be in money market mutual funds. You want 50% of this, because equity mutual funds has 70% of your investment in equities, in stocks. Money market mutual funds has all your funds in money markets. That has to do with treasury bills, commercial paper, and government bonds. Then balanced mutual funds has a combination of both. 50% in equity mutual funds, 50% in money market mutual funds. So if you know that you are comfortable with working as a hybrid investor, you can invest in balanced mutual funds. Then we have halal mutual funds. The difference between this and the equity mutual funds is just the fact that it's a Sharia compliant investment, meaning that when you invest, they also Sharia halal mutual funds invest in equities, but they don't invest in equities that have to do with alcohol, sporty bets, all those funny kinds of businesses. They don't do that. So that's why they call them Sharia compliant investments. So these investments are done in stocks that are Sharia compliant, but it is still equities. But they don't do alcohol, they don't do tobacco, they don't do betting. Any company that has to do with that has to do with any of those things, they don't do that. That's why they call them Sharia compliant investments. So before you invest, define your goal. Is it short term or long term? If you are looking at short term, invest in money market mutual funds, because you want your funds between now and the next 1 year. At least you want to use your funds in the next 3 months, 6 months, 1 year. Invest in money market mutual funds. You want to use your funds for house rent. You are building it for recurrent expenditure. But it is for long term. You want to actually build and grow your wealth. You can invest in equity mutual funds or balanced mutual funds or the halal mutual funds. And clear goal, if you have a clear goal, it gives you direction. What that means is that you can no longer put your house rent now and be having high BP when you put it in equity mutual fund, because you know that one is stocks. It's not as if your wealth will not grow there, but it's just that you don't put yourself under unnecessary tension. Because, for example, in 6 months' time, it has not grown, and you want to use that money in 6 months' time, and your money has dropped, you will not be under high BP and be praying prayer you're not supposed to pray, because your clear goal did not give direction. If you had a clear goal, you'd have had a direction. So if your clear goal is to be short term, invest in short term funds, short term investment. Sorry, if your clear goal is long term, invest in higher risks investments. Then know your risks. Is your risk conservative, moderate, or aggressive? Conservative is that you want to see your funds. You don't want to hear story about your funds. That is conservative. Moderate means you want a bit of both. Aggressive means you want to start growing. You don't want to hear story. You want high risks and you also want high returns. Then portfolio diversification. You cannot put all your eggs in one basket. The whole idea of mutual funds is to teach you just one option. There are different other options, which we will learn here from time to time. But it's not good to put all your eggs in one basket. You can decide that you put some funds in money markets, put some funds in equity. You cannot put all your funds in equity. Then you now need funds for recurrent expenditure. You will not see the funds. So, or you need the funds for short term, you can put it in long term. So don't put all your eggs in one basket. Spread your investments and reduce your what? Risk exposure. Very, very important. So how do you choose the right fund managers? Because there are a lot of fund managers out there. How do you choose the right fund managers? So we have number one, check performance using fact sheets. I will show you. That's why I said it's practical. We'll do theory, we'll do practical. I will show you how to know it so that nobody will bubble you. Nobody, it's your money. You do your research, you do your due diligence, sorry, and decide on where to invest your funds. So you check their performance, their previous performance for the past 3 to 5 days, 3 to 5 years, sorry. How have they invested customers' funds? So that will give you an idea or safety net to know whether you are investing your funds with this company or not. Review the fund managers. Are they registered with SEC? You can go online and check ChatGPT, check Google. Even go to SEC websites and ensure that these fund managers are registered with SEC. Then number 3, understand the fees. That's the charges. Don't just invest your funds and when it's time to get your returns, you'll not overcharge your returns. So some funds are charging 1.25, some are charging 1.5, some are charging 3.5, some are charging 2.5, depending on what you are doing with them. So understand the fees and decide which one you want to play with. Then do your research. I tell people that this is your money. No matter what you think about it, you don't just wake up after working so hard, you save this money and you just wake up one morning and throw it to anybody. No, do your research and be comfortable. Be sure that this particular fund manager is worth investing in. Then mistakes to avoid. Don't do any investment without planning. Sit down with yourself and have a plan. Take your pen and paper or take your notepad in your phone. Decide, okay, what do I want to do? Okay, I want this fund in the next 3 to 5 years. I want to use this fund in the next 3 months or 6 months or 1 year or 5 years. Every fund I invest are funds that I've saved. I even tell people, no, I cannot save anything less than 1 million in a year. No, it's not because I'm earning one fantastic, but I cannot. I know what I have seen and I push myself because I know what the future holds when I invest this fund. I cannot save, and I even want to hype all my economic. That's some women in this our group. Third month, they don't cross million savings mark. That they have not crossed the millions savings mark in this group. Month 3. Think of what they will earn or what they will save at the end of the year. So I tell myself that I cannot do anything less than 1 million. Nothing, not at all, no matter what. Because I know that I have a plan for this money. I know where I will invest this money and what is capable of yielding for me if I invest it. So I'm not trying to play safe, but I'm just trying to let you understand that have a plan for your money. So mistakes to avoid is no plan. You don't have a plan for your money. Following hype. Your social media, they tell you this one, you go and put your money there without doing your research. You don't follow hype. People are talking maybe because they are influencing for the fund managers and they're trying to just make money for themselves. So don't follow hype on social media. Number 3, don't ignore fees. Ask questions. If you don't see it on their website, call the customer service. Please, I want to know the fees for so and so amount. Make sure you know what you're getting into. Don't ignore fees. Invest consistently plus monitor. Invest monthly, review regularly and rebalance when needed. As you increase your savings, as you increase your funds available to you, have a need to remove a particular amount, even if you're a business person, a particular amount from your profits, or a salary earner, a particular amount from your salary, and invest monthly. Review regularly. Find out, am I pushing myself as much as give your best. You are not joking here. You're not wasting your time. Give your best. Seriously. Review it. This thing I'm doing, is it going to benefit me? Some people can give 100,000 per month. They are doing 5K because shawarma and Cold Stone will not allow you. Or you want to buy all the whole weeks, you want to buy all the whole clothes. No. The money you will earn, you will buy clothes and you'll be tired. So review regularly. Am I giving my best? Rebalance when needed. Try to rebalance. Are you over investing in more and under investing in another? So rebalance when needed. Key takeaways: start small. No matter where you start, yet you hear people are saving millions. If your capacity is not to save millions, start from where you are. I started from the scratch. I know what I'm saying. I started from the scratch. By the time I was saving 5,000, I didn't have anywhere to go to until I grew and I kept growing. So start small. Don't say, because my money is too small, I want to wait until I start earning millions of money. No. Let me be sure that people are hearing. So start small. Stay consistent. Don't be distracted. Focus your eyes on the ball. and think long term. Don't think of 3 months time I'll eat all the whole money, 6 months time. No, ask yourself in the next 3 to 6 years, where will I be? If you retire and start leveraging on what you have saved over the years, it's not a bad thing. It's not. Nobody, your boss will not be insulting you at the place of work, because when you look at your account, when it's insulting you won't be happy, because you know that from any time from now I can put my I'm not saying that you should resign, but I'm telling you, you can build yourself to that stage when you can now be calling the shots. So think that these are Nigerian mutual fund options. We have GT fund managers, we have Stanbic IPTC, we have FBN Quest, we have ARM, we have Carrywise. There are many. I just dropped five here. There are many. Go online, decide on the one you want to do, do your research. And so let's go down to practical. I want us to stick to eight to 8 to 9, like I said. Chidogo, thank you so much. Great exposition. I can hear you. Thank you. Thank you. I can see you. Sorry. Thank you so much. So let's get into practicals now. 8:28. I want to be sure that we leave here by 8 to 9. I know some people want to attend to their families this holiday. So personally, I use Stanbic IPTC. Personally, so I want to use um my own fund manager to teach you, but it's not a must. The fact where I learned from, I was taught differently. I did my research and decided to stick with Stanbic for my own personal reasons. There are a lot of fantastic ones out there. So don't say because I taught you with this one. I'm just teaching you how you can go about it, so that even if you want to invest, you can also invest. So let's just keep. When it comes to their security, I love that very, very much. So, okay, sorry, I wanted to show you something. Let me start some. Let me go back to login. So, if you are coming here for the first time, you don't have an account at all. You just click on sign up. Before you click on sign up, even if it's not Stanbic or any other, if you want to register with Stanbic, you can go to any of their branches and register, or I can send you a link. Then you can register with them. Just go to bluenest.stanbicibtcassetmanagement.com, or I can send you I'll drop the link in our group, so that you can also click and go ahead with it. If you just click on sign up here, before you click on sign up, please make sure you have your BVN, your NIN, your ID card, your NEPA bill, that's your utility bill, and your passport. Snap it on your phone. Snap it on your phone. Then you just click on sign up. That's for somebody that have not signed up on, you've not registered at all. Just click on sign up here. So if you put your email address, choose an email address you want to use, and put your phone number, it will take you to the registration page, where you will attach all the documents and respond to all the questions. Tell you to put your name, your date of birth, all the everything about your registration details, where you are from, your state, your location. Then you now attach also your identity details, and within 24 to 48 hours your account will be sent to you. Get an email address telling you that your account has been opened. So you click on the link and now change your password. So that's how it works. So if you've not signed up before, just click on sign up and you'll be able to sign up. Then because I've signed up, I'll just click on sign in. 63887. So normally, anytime you try to keep sending you different codes. So that's the beautiful thing about Stanbic. It sent you different codes at different points in time. So validate. That's your OTP. So this is how the interface looks like. This is how the interface looks like. So I want to teach you what you will do before you invest in any funds, even if it's not Stanbic. First thing you will do is to go to, for a Stanbic here, you go to explore and click on that. You can click on all assets, but I want to click on mutual funds. We have treasury bills here, we have commercial people. We're focusing on mutual funds for today. So click on mutual funds. Imelda, I will drop the link in the WhatsApp group. I'll drop it in the WhatsApp group. So when you click on it, you will see mutual funds. You will see every kind of mutual funds that they have here. We have Stanbic IPTC money market mutual funds. Now, before you start, this is the only one that has interest rate attached to it. Every other one does not have interest rate. Are you seeing it? Every other one does not have interest rates. Only money market mutual funds has interest rates. Why? Because money market mutual funds depends on the money market instruments. So that is why they have a rate there. Because money market mutual fund depends on money market, it depends on treasury bill rates, it depends on commercial papers rate, it depends on government bond rate, but every other one has a bit of equities attached to it. So when it comes to equities, you cannot predict. This dollar funds. When it comes to equity, this money market 15.45 as at today. Then we have Stanbic Enhanced Fixed Income Fund. We have Guaranteed Income Fund. We have Sharia. This is the one that doesn't invest in anything that has to do with tobacco, alcohol, and sport betting. That's why it's called Sharia Fixed Income. This one, look at fixed income that has to do with Sharia. Then we have Balance Fund. This is a mix of both equities and the money markets. We have Stanbic IBTC Nigerian Equity Funds. We have Ethical Funds. They are all stored. That's why you can see that they all wrote high here. High. Then we have Stanbic Imam Fund. It's the same thing with equity fund for this Imam. The only difference is that they don't invest in, they invest only in Sharia compliant funds, like I said before. So how do you now check and be sure of what you are doing? So let's start with this Stanbic IBTC Imam Fund. It's the same thing with equity, but I want to just click on one. View fund analysis. You click on view fund analysis. Now, what is it telling you here? 30 days price range. For the past 30 days, it has grown by only 1.84%. Year to date, 33.31%. Meaning that if I invested my money, let's say I invested 1 million in Iman funds, by today, I'll be having 330,000 naira as interest as at today. Do you understand? Year-to-date price means that from January till date, it has earned 33.31. Then 1 year price range telling you that by this time, if you invested by this time last year, for example, we are in April now, invested by 1st of April last year, you will be gaining, by now, your 1 million would have added 1.2 million naira extra would have been on your. You see why it's good to leave it for long term. Don't understand why it's good to leave equity funds for long term. Then we have 5-year price range, 493.58%. So if you had left your fund 1 million naira for what they call it, 5 years, you'd have had additional 4.9 on your account. You start to make money. When you see them traveling, you say, hey, how they do it though? They start building structure. I told you at the beginning, investment is structure, not luck. So minimum initial investment here is telling you what, 5,000 naira. minimum subsequent subscription, meaning that if you invest with 5,000 naira at the beginning, subsequently you can also be investing with 5,000 naira. That's minimum subsequent subscription. That's the minimum. You can do 1 million, you can do 100 million, you can do 100,000, depending on your capacity. Then we have minimum holding days. Minimum holding days is 90 days. What that means is that when you invest in this fund, you cannot touch it until after 90 days, after 3 months. Everything said, every fund manager must be transparent so that the person that's investing or the investor that's investing will know what he or she is getting into. So minimum holding days here is 90 days, meaning that any money you put here, you cannot call them and say you want to withdraw on before that 90 days. You must leave it for 3 months. Then the investment trick is showing red. Red is showing what? High. High, meaning that it's high risk, high returns. Why is it high risk? We'll get into to achieve this. A minimum, you can see it here. The Stanbic IBTC Imam Fund seeks growth of capital for investors while adhering to Islamic principle of. To achieve this, a minimum of 70% of the portfolio is invested in Sharia compliant stocks or equities, and a maximum of 30% in other assets like sukuk. So let's get more information. So here we're getting, you want to now get into details. Because I told you it's your money, you must research. You want to get into details. All of them are listed here from A to Z, but let's open the consolidated sheet so that we'll not need to open them one after the other. So there's a consolidated fact sheet here. This one now carries everything from beginning to end. So that's what we'll open here. So are we seeing this? If you can see my screen up, yes, I can see your screen. I want to be sure that this is a very important part of this training. Very, very important. I want to be sure that you can hear, I can see your screen so that I can continue. If you can see my screen, drop, I can continue. Okay, Mrs. Dorothy, thank you so much, ma. Thank you so much, Emmanuel Faye. Thank you so much. Okay, so let's continue. I want to just break down how you understand the different historical performance of funds. No, now instead with Stanbic IBTC aggressive funds, the market commentary just telling you everything about the funds. When you go down here, you can see historical fund performance. Historical fund performance. So, what are the things that makes you feel safe to be able to invest in these funds? Year to date, 2026, you can see it here. It's showing it means that if you invested in, if you put 100,000, or let's say, I like million. Let me continue with my millions. If you invested 1 million naira in these funds by beginning of this year, you will have 23.45% yield year to date 2026. So anybody that invested in this fund by January should have extra 230,000 naira in your account. So it's telling you that from year to date, they have made for their investors 23.45%. Now for 2025, for year 2025, that you can see here, they made 58.57%. What does that mean? If you invested 1 million naira in January 2025, by December, you'll be having 580,000 naira sitting in your accounts for money market mutual funds. Do you understand? So you see my screen. Then we have year 2024. The same thing, 48.9%. Like that. Are you seeing it? 2023, 66.38%. For 3 years, they earned 292, and for 5 years, they earned 409%. So the same thing for all. So it's telling, what is it telling you here? This is a fixed income. Let's go down. Let's go to equities so that you understand it. Well, you can take your time and read it later. Let's just go to equities mutual funds. Okay. So for equity mutual funds, it's telling you here asset allocation. Minimum is 70% equity, maximum is 30% fixed income. Meaning that if you invest 1 million naira in this fund, 700,000 naira of your money, 70% will go to equities, 30% will go to fixed income, either government bonds, treasury bill, or commercial paper. Everything is transparent for you here. Do you understand? The risk profile is aggressive, it's high. It's high risk. It is high risk. So it's for long term. It's not for short term funds. It's telling you here as equities, asset allocation 72.34%, fixed income 27.6%. So this is how they allocated the funds for the month. We have year to date 27.991%. We have 2025 for year 2025, we have 68%. We have 2024, we have 39%. So you see that when you look at it, for 2024, they had the year to date was 39.96. 2023 was 48.42. So you see that it fluctuates, it's not static. It will come down this year, it can come down tomorrow. If you invest in equity mutual funds, you can check your funds today and realize that your funds is even in loss. But it's not in loss until you withdraw your funds. Do you understand? Because stock market prices always fluctuate. So you can look at it today, the funds will fluctuate. Tomorrow it will be high. So be sure that you're not the one that you put your money here, tomorrow you'll be fidgeting. Instead, you go to money market mutual funds. So you see the different yields. So this is what you look out for before you invest in mutual funds. If you want to invest in equities or you want to invest in money market. So let's go to money markets. This is ethical. Ethical invest 80.7% in equity. That money market mutual funds. Yeah, look at money market mutual funds. You see that when it comes, it's giving you the rate in percentage, because money market mutual funds is risk profile conservative. So if you are sure, or if you want to, if you are looking at capital preservation or safety of your funds, invest in money market mutual funds. Fund objective: the fund aim is to achieve stable income generation and capital preservation. So they invest in treasury bills, commercial papers, government bonds. You can see that the rate here now is in percentage. So it's 15.5%. It was 15.7. Now, one thing money market mutual fund is that the interest rate is not static. If you look at for year 2024, it was 18%. For year 2025, it was 19%. Now it's 15. You can invest in money market mutual funds on the 1st of April at 15.5%. By 30th, it has dropped to 14th or even increased. Do you understand? The rate is not the rate they give you, is the rate they got from the treasury bill and from commercial paper. So you can invest now 1 month. By end of the month, the rate will drop or it will increase depending on the rate of the money market instruments. So from money market is for conservative and low risk investors, where you are sure of capital what preservation. So that will be all. But let me go back to. So if you want to invest, you just need to just go here, click here, and click on invest now. Click on invest now. Click on naira. We don't want to do dollar. Click on next. If you have an existing account, you can click on top up. If not, you open a new account. That's how it works. So I think I'll also work on this and drop it in the group so that one I will also go back and also look at it. Click on next. Choose the particular one you want to do. Sorry, it has logged off. If you just click on next and click on the particular one you want to do, click on the amount you want. It will just click and it will go like that. So I hope you understood. I was able to open your eyes to the opportunities in the mutual um, funds markets. So if you have any questions, you can drop it now so I can look at it. Well, 8:40. The time is 8:48, so that we can answer some few questions. If you have any question, you can drop it in the comments so I can respond to them. I don't want the video to be so long. So money market mutual funds, equity mutual funds is a good way to invest your funds. Subsequently, we also talk about treasury bills, commercial papers, government bonds. Those are also investment options available to us. Stocks is also a good way to make your money. No, you can't invest your pension, man. You already have a pension custodian already. So but this is your own, because there's no way you can, unless you are a pensioner, you are receiving your pension and you want to invest it. That's not left for you. So you decide on the amount you want to invest and invest your funds. Thank you so much, Ngozi. Very insightful. Thank you so much. So one thing I want to also note is that I want to encourage us not to take our savings lightly. Don't take it lightly at all. Don't take it lightly. Make sure you are giving your best when it comes to your savings. Okay, Ngozi is asking, how do you withdraw from money market? You can withdraw from money market if you just, when you invest in the funds, if the minimum holding days have reached, for example, is for money market mutual funds is 30 days, for equity market is 90 days. If the timing has reached and you want to withdraw your funds, you will see where they clicked on withdraw. You just go there and withdraw your funds and your funds will hit into your bank account. So that's how it works. As soon as after investing your funds. So Chidogo said there is no much difference between normal interest rates in the bank and money mutual. Who said so? Hey, who said so? That there's no difference between, okay, please let's test it. But I won't test my own. No. It's not my money I'll take. I've tested it and seen. Go and meet bankers or meet someone in the bank. There's no difference. So minimum amount is 5,000. So Ngozi, if you want to withdraw your funds, when you invest the funds, you will see a place there under, you'll see where you click withdraw. Just click on withdraw. Your funds will be withdrawn into your wallet, because this money market mutual funds comes with a wallet account. It comes with a default wallet account. So when you withdraw your money, it enters your wallet. Even when you can even decide. Yes, you can decide. You can, when you are registering yourself, when you are registering your form, you see a place where you can put your account number. So you put your personal account number. So when you want to withdraw, tell you wallet or your account. So you see that will now choose. If you want to put it into your wallet, you can leave it in your wallet. If you want to put it to your personal bank account, you can put it to your personal bank account. What about PiggyVest? Can I use it for mutual fund? PiggyVest is not the same thing with PiggyVest is for savings. Unless you want to withdraw your funds, then what I tell people, look at the rates. You can decide. There are different options: money market mutual funds and PiggyVest. You can decide and go to. If you go to PiggyVest and realize that, because PiggyVest is high yield savings accounts, it's also a good investment option. So if you go to PiggyVest and maybe the rate is 18%, it doesn't make sense for you to put your money in money market mutual funds, unless you want to do long term. There's no way you can compare high yield to equities if you are doing long term, because equities only give you higher returns in the long run. So, but when you want to invest, you can go and check the rate of treasury bill or PiggyVest and decide, because they are all low risk investments. So you decide on the one you want to do and invest in that one. So that's how it works. So if you still have bulk funds sitting in your bank account, you are wrong. Not in this group. You are doing yourself a very huge disfavor. a very huge disfavor. So even if, for example, you can go to walk into any of the banks, Stanbic IBTC, First Bank, GT Bank, or you go online. Just, it's very easy. Attach all these documents, and an account will be sent to your email. If you don't want to open them, even in Iconic Quartz Hub, we invest in low risk investments. So these are places we invest. So it's even better than your commercial bank accounts. If you feel that I don't have the time for all these things, so bring and add it to your savings here. If you are sure that you don't need the funds before December, because we only do payout here only in December, second week of December. So you can pay in, add it to your savings, so that by December you will earn something on your money than living and earning peanuts in your accounts. Which investment package allows you to get your interest monthly? Money market mutual funds, they pay your interest monthly on money market mutual funds. But equities is your money comes in based on what they get in the stock market. So for money market mutual funds, you are sure you get your interest every month. But for equities, it's when they make money from the stock market that you get gains. I told you that I invested 2 million in the stock market on 13th of February, and as at today, I've gotten 260,000 naira. But if you look at the monthly, that's a 1 month range, it's showing 1% increase. So as at last month, it was only 1% increase that they got. Do you understand? So it's when they make money from the stock market that you make money, compared to money market mutual funds when your interest is coming in every month. So if you have further questions, 854, thank you so much. If you have further questions, drop it in the WhatsApp group. I will respond to them as soon as I see them, as much as I can. Then you can also watch a replay. If you don't understand one part of the section, maybe I was too fast, or maybe it was going too fast, or maybe we had network issues, I'll drop it in a group. This same link, if you click on it, you can still have a replay and rewatch it and have an idea of how to invest your funds and build wealth the smart way using mutual funds. Thank you so much. Thank you, Simi. If you got value from this session, from this webinar, please drop an emoji. Oh, thank you so much for joining. I'm so grateful. Thank you, Ruby Adenregu. Very low there. Thank you, coach. Thank you. I'm so grateful. Thank you for joining. Thank you for joining. I hope you are resting this Easter season. I hope you are getting your well-deserved rest. Thank you so much for joining. If you have further questions, please drop it in the group and I will respond. I appreciate the fact that you took out your time and joined us in this session. God bless you. Have a fantastic Easter celebration. Bye. Bye. Thank you so much. Bimbo, bye. Sylvia, thank you so much. God bless you too. Thank you, Nkiru. God bless you. Bye. Chiamaka, thank you so much.